We're pretty deep into this inflation fight, and it certainly caused a lot of pain in the market, yet we're seeing very little progress. We've seen very little impact on the rate of inflation, and we've seen very little impact on the economy, at least according to some people, and at least according to some metrics. And that leaves us in an interesting paradigm, because rates are higher, but the economy seems to be holding up well. At least in some parts. We're getting some signs of good news on some earnings reports, and we're getting some pre-releases, pre-announcements that are not so good in very specific areas of the economy. And the Fed has trickled in some talk about specific areas of the economy and the supply chain specifically showing signs of improvement. So there's a lot going on here, in my opinion. A lot going on. A lot of things going on, but very little actual change in the environment. If the economy is still strong, well, the economy is still strong. And there's less reason to worry about a recession. I'm not saying that a recession isn't happening, but it's not like we're getting double whammied here as much as I probably felt could happen. And the market probably fears will happen, and I might still kind of fear as a possibility. So, for example, the market was and has been fearful about higher rates. All right, we've gotten those higher rates, that's for sure. The rates are still in negative real territory, though. Basically, if you're looking at year-on-year CPI. If you're looking at month-on-month, harder to say with certainty. But if you're looking at year-on-year, if you're looking at just kind of putting them both together, year-on-year and month-on-month, trying to get some number, we're not really in significant, real positive interest rate territory yet. So nothing crazy on the interest rate front, really, if you consider that. But the market was certainly fearful about rates going up for good reason and has adjusted. Next, there's this notion that, earnings need to come down. This is a sentiment that many people feel, that earnings haven't been revised, but is a sentiment many people share, including myself. I do, still think some weakness in the economy is possible. But we're not seeing that so badly yet. I mean, that's the Fed's concern here, is that things aren't getting too bad. They're not getting too bad. They want to get them too bad. It's an interesting mishmash of things. I don't know. I can't tell you with certainty. Jamie Dimon can't tell you with certainty where the economy is going to go and where the market's going to go. What I can tell you right now, though, is how am I positioning my portfolio and how am I looking to balance risk and return. So if you go to the videos towards the top of the most recent bear market rally, you'll hear, a sentiment that we've been very overstretched. It feels like we're kind of at an inflection point, that we're either going to burst higher and the bottom is out and the Fed's going to pivot, or that we're going to have to give back some of these gains. That was how our positioning was reflecting itself. And we made the decision that downside was more likely. So we were positioning for the downside. We got that downside. And now I feel like we're at a somewhat similar type of inflection point. However, instead of tremendous sentiment and aggressive bullish positioning, we're now experiencing tremendous bearish sentiment and a lot of fearful positioning, lack of ownership, and a total takedown in certain stocks that may have been warranted to see some declines based on the rise in rates, but may not be warranted to see another leg or as much decline as they've seen based on the fundamentals of the business and how it can perform in an economic downturn, or a not so damaged economy. And these are the kinds of stocks we're buying And we talked about it in the last video. We didn't make a video yesterday. We talked about it on Monday's video. We mentioned Amazon and AT&T. You can go to those videos to see that logic and that reasoning. It's a long video, but there's good explanation in there, in my opinion. And we'll talk about a couple more that we've been nibbling on in addition to Amazon and AT&T. We've been nibbling on some Next Era Energy. This was an existing position. Amazon and AT&T had not been. I don't believe I ever owned Amazon, but I had owned AT&T in the past. Next Era Energy, they're producing cash flow now. 79% institutional ownership. You think of ESG, you think of BlackRock, you think about conspiracy theorists talking about how ESG is this political thing to boost certain assets. Well, they're winning, it seems. They're getting their way. And Next Era is coming down and produces cash and has 79% institutional ownership. ESG people. They're using their connections with the deep state to influence politics and funnel cash to this business. So we're buying some of this business. So you can do deeper analysis on it than that. If you do, you will find that it's actually a pretty solid business. So we have some, we added to some, continues to fall when energy prices are rising. We also added to Uber. Another political weird thing going on. Biden had just had his endorsed deal between the rail union and the capital owners be rejected by the rail union. So we think in order to save face, he had to come out strong and overflex being pro-union, maybe, or pro-worker. Nobody was asking for it. No Uber drivers were asking for this. But Uncle Sam decided to stick its neck into things and demand that they get their interest-free loan from you every single week. Or every single day. I don't know if that's possible because with Uber, you can cash out immediately, multiple times a day. But as far as I'm concerned, the government typically does the tax thing on a weekly basis. I don't know. It's strange. This whole income tax thing wasn't really around for the first several hundred years of the country. So, interesting. Those are two stocks we're buying when they're being aggressively sold. We think their fundamentals are strong. People still got to eat. You know, we've seen how Chipotle has become a substitute good for wealthy people when it comes to eating dinner, etc., eating lunch. Instead of going to the fancy restaurants, just get some fire Chipotle, etc., etc., etc. We think Uber Eats might be a similar substitute, and their customer base is largely wealthy. Uber Freight is a strong proposition. They are constantly expanding their business, and they're getting cash flow positive. The stock is historically cheap on a price basis, well off its initial IPO price. And I just see continued margin expansion, continued earnings growth, and continued revenue growth for what is a very well functioning engine of a business model at a more mature state. It's still early maturity, but they're focused on investment grade. They're saying all the right things. I think they have the engine to actually pump out power and produce some cash. So I like Uber. And I happen to think that Joe Biden won't win that fight. I think it's a dumb fight. And I think it's driven around saving face, not actually trying to do something good. So bought the stock when it's down roughly double digits. I'm buying some Jumia. Jumia we've made videos about on this YouTube channel. You can go back into the early history. There should be a section about it specifically. I believe it came out March 12th, 2020. Good video. Explains why we like Jumia, but we're buying it here. It can produce tremendous returns. I think it's a fantastic business. I think its losses have peaked, as its CEO said on the last earnings call. So, we're nibbling here and there. I get it. More downside is possible. I think if more downside comes, oil prices will rise. Did we say we were selling energy today? We did not. We're actually nibbling on energy transfer a little bit today. So we're making moves here and there. Ultimately, I think the market is prepared for a CPI that's hot. There's a 0.2% range in the expected. I think it's highly likely we get a beat or a miss. I don't like this guessing game, but I do think the market is prepared for whatever it gets. I mean, the Fed is signaling it's going to be pretty hot, so it's probably going to be pretty hot. And I just think the market's prepared for it. So we'll see what happens. That's today's video. And until next time, peace out.